Hi everyone, today let's take a quick look at what the Fed is saying. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fed officials say that rate cuts are coming, but they don't think that they're going to happen anytime soon. And I think this is part of what sent markets down. You can see this was said earlier in the day. They think the long-term rate is expected to be between 2 and 3%. That's going to be your long-term neutral rate. And you can see Fed President Mester was the one speaking, and she didn't say anything in terms of timelines, but she did sound a little bit more hawkish than what we've been seeing from Fed Powell. And I think this is starting to have a little bit of an effect. And you can see here it seemed to rule out a cut in the April 30th to 1 May FOMC, which I already expected, but I think markets were a little bit optimistic on that. And lastly here, I wanted to highlight they mentioned 3 cuts is a projection, not a promise. And like I said, that is significantly more hawkish than what we've been seeing from Fed Powell. So just something to keep in mind, and we'll take a look at the Fed futures later. Moving over to fear and greed, you can see we stepped down substantially, down to a 63. Look at that drop off. Down to a 63, that's as low as we've been here going back to January 17th, where we dipped down to 57 just for a moment. If this does not reject higher, that's going to be very concerning. You can see momentum stepping down to greed. First time we've seen that in a long time. Breadth still hovering, as well as strength. Put call ratio still extreme greed. Market volatility neutral. Safe haven demand stepping down substantially, and junk bond demand stepping all the way into fear here. So definitely some fear coming across markets. Interesting to see that. And we are definitely seeing it on this indicator now. Moving over to seasonality, we did see a potential for a dip here. You can see that from the second into the third. Seems like that might have come a little bit early. That was on the Russell. NASDAQ wasn't expected to dip really at all, at least until mid-month. And you can see that substantial drop off into mid-month seems to be coming in a little bit early. We'll see what tomorrow's price action looks like. So choppy price action early this month into mid-month. Moving over to Fed futures here just for a moment, you can see 4 weeks away from the next rate decision, and you can see here May, almost 100% that we're going to get a pause, and that did step up here a little bit. And you can see some probability yesterday of an actual hike, and that did go down to 0, so that's interesting. So it makes sense, almost 100% chance that we're going to get a pause, slight chance of a cut. Probably where I would put it as well. And then looking at June, market's still projecting a little bit of a cut. Let's look at the changes here yesterday, going up a little bit of a pause. And that does make sense to me as well. And then looking at July, still potential for a pause. And you can see it's the highest percent chance. And looking at the numbers, you can actually see a little bit higher percent chance of a pause in July. So markets are not all the way bought into the fact that we're going to see a cut June or July. And then looking at September, then we're starting to see those higher probabilities of at least 1 cut, if not 2 by September. I think by September, we should get at least 1 cut. I think the real question is, does it come in July here, or is September the first cut for this year? Moving over to the economic calendar, you can see JOLTS report came in just slightly less than expectations. Previous number was revised down a little bit as well. Factory orders better than expected. And then we got those FOMC members speaking quite hawkishly. For tomorrow, CPI Eurozone, some economic data here around 9:45 to 10 o'clock. Global composite PMI, fairly interesting, non-manufacturing PMI. And then as we get into the Thursday, there's really nothing on the calendar for Thursday. And don't forget your ADP non-farms are tomorrow as well. Moving over to Max Pain, you can see Max Pain jumped up a lot here to 519, and that is where we finished for current price. 527, 530, big call walls, 523, also a decent call wall. Put wall, 519 and 510. Makes sense that we would finish right in the zone. I think we're going to see some choppy price action, but right now we're basically right on top of Max Pain. And put call ratio still hovering around that 1.5 area, which is quite low relative to what we'd been seeing recently. Moving over to the charts, starting off with the S&Ps here on the hourly chart, you can see we sold off massive pre-market, hit the level 517.12, bounced a little bit from that level, and we got back above the 200 SMA on the hourly chart after hours. You can see strong volume on that last candle of the day. So a little bit of a buying reflex coming in, decent. Still down 0.64 on the day. You can see this zone expected to drop through there. Based on the volume profile, momentum RSI bearish makes sense. 21 EMA on the daily chart right in that zone at 516.33. We'll see if this area holds tomorrow. Really needs to hold this zone. We've been here before. Gap down, held, gap up, rally. If it's going to do it, really needs to do it here, push back up to that trend line around 525. But right now, this is a little bit concerning. And like I said, we've seen it a few times, actually. If you look back here, big gap down, very close to that 200, rallied up, tested it again, rallied up. So far, these tests have been holding, and we'll see what happens here tomorrow. Moving over to the Tasty charts, you can see that same dip low here on the hourly chart over through that lower ATR band. That's currently trading at 517.16. So that should be an area where we could find a little bit of support. That would also give you a double bottom. And you can see big volume coming through on that bullish candle. You can see big spike there, so might see a little bit more buying in the early part of tomorrow's session. Moving over to the 4-hour chart, you can see we did take out that ATR stop here, so technically in bearish conditions, hitting that lower ATR band, 516.55. Did get a slight bounce from that 89 EMA, 517.47. A little bit of volume coming through, but volume weighted MACD slightly bearish. And then looking at the daily chart, looks very similar to the daily chart on the trading view charts. Hit that middle line just like we have here before. Still bullish stop. That's currently at 511.65. It is a little bit more interesting here that we've kind of had a bit of a top. On these previous dip lows, we did push to a new high, dip low, new high, had a dip low here, push to a new high. If this is going to do it, it needs to hold and push back up to this new level of around 529.49. Moving over to the Qs, similar thesis, big dip low, hit this trend line, bounced a little bit, almost hit this upper trend line, after hours pulled back a little bit. Momentum still bullish, RSI still slightly bullish above the SMA on the hourly chart. Again, big buying volume on that last candle. Daily chart, we did get below all the EMAs and SMAs. We did that here as well, touched support and then rallied. If it's going to do it, needs to hold here. Momentum and RSI both bearish, so definitely concerning, not unlike we've seen before, and sometimes you see big moves like this where you gap higher and rally, so you do have to factor that in as a potential. But of course, this does look a little bit weaker here today than it did yesterday, with a low and a lower low. Moving over to the hourly chart, again, you can see bearish conditions, ATR up at 443.50. We did hit that lower ATR band and bounce right at the 8 EMA at 440.94. Similar thesis to the SPY here on the 4-hour chart. ATR did get taken out. That was at 441.49. Pushed almost to that lower ATR, just barely missed it, and that's trading at 437.61. So that's a critical point right there. And again, we've seen this. We've touched that lower ATR band, held higher low, rallied right up to that upper level. If it does it again, your upper ATR is up around 450.43, and that would be a nice bullish change of conditions as well. A little bit concerning to see these ATRs rolling to the downside a little bit. Momentum bearish on the volume weighted MACD. And then looking at the daily chart, really nothing has changed here, continuing to hold that 34 EMA, touch that area here again, just like we did here on February 21st, again on March 15th, and here on March 19th, touching that same zone. And it needs to bounce if it's going to do it. Moving over to the Russell and the Dow, you can see both of these were down quite a lot. Russell down 1.84%, massive gap down and fall, got down to that 204.62 level, ended up closing below it. After hours, we are a little bit above it, bearish momentum, bearish RSI. And then looking at the Dow, again, gap down to that level 21 and VWAP, did hold that level at 391.50, so critical zone there. If that breaks, 387.77, momentum bearish, RSI bearish, definitely seeing some reversal of conditions, and both of these look a little bit weaker going into tomorrow's session. 55 EMA on both of these, 237 on the Russell, and 387.92 just below that level here on the Dow. Moving to Apple and Tesla, they both broke down here today, so they finally did it, gap down and fell. You can see we haven't quite taken out the low from 7 March yet. I would expect it to move lower. 165.71 is current support after this structure broke, which it did here today. Again, we've seen some levels of support in here, but I would expect this to break down further. Momentum and RSI both say it's going to go lower. And similarly here on Tesla, we got some bearish news on them. Momentum and RSI falling, volume accelerating. Might find some support at these previous lows. That would be 161, but next support for me, 152.43. Moving over to Meta and NVDA. Meta actually positive on the day, 1.23%. Momentum rolling to bullish, RSI looking good. Held support around that 484.20 level. Got back above my level, 489.67. We're right at the 21. Needs to get above that on the daily if it's going to do it. 497.17, and then push to these previous highs. Have a level at 520.31. And then looking at NVIDIA, bearish on the day, 1% to the downside. Momentum and RSI bearish. Definitely looks a little bit weaker. And If this zone breaks, your next level of support is all the way down at 792. Moving over to staples and discretionary, it looks like we're getting a little bit of everything selling. You can see staples down over 0.5%, discretionary down 1.47%, momentum and RSI on both of these look bearish. Took out my 75.40 level. If that continues to break and we don't bounce tomorrow, next level for me is down at 74. Got the 55 EMA there at 74.22. Seems like this structure is starting to break down a little bit. And then looking at discretionary, we talked about this being weak at the level, gap down and fell massive below 180.10. Got the 55 EMA and this kind of intermediate support area around 178.68. If this level breaks down, you got 174.76. So super important area, and both of these look pretty weak going into it. Moving over to oil and gas and energy, just so you know, these are continuing to be on a rocket ship. Next level here for oil and gas, 161.59. Energy is at all-time highs, so I don't have any levels there. You can see previous high was taken out yesterday, and then here today going another 1.4%. Momentum and RSI still super overbought on both of these, so makes sense, continuing to go higher. Energy prices have been going higher into the summertime period. Moving over to breadth on the 20 and the 50-day, you can see both of these were bearish again. Now we're into a critical zone. So if it's going to bounce, it needs to do it now. 51.75, you can see we got into this zone before, tested it, and then bounced. If it's going to do it, like I said, needs to happen. Momentum and RSI both bearish, just like they were last time we were here. And then looking at the 50-day, similarly, we did get a dip low into this area that we've been previously. The different part here is that we are now below the 9 and 21. That has not happened all the way back here since really the end of February, and now we're doing it again here at the beginning of April. Momentum and RSI both bearish. In terms of levels, 68.66. Below that, I have 62.25. Moving over to the 2-year and the 10-year. 2-year actually sold off a little bit here today. We talked about the Fed comments and how that sent interest rates a little bit higher, but that was actually on the longer dated ones that we were seeing that. So 10-year pushing the level, hit it here today, 4.35, closed basically on top of it, almost to the penny. And then you can see here above that, I have 4.5. 4.55. Momentum and RSI bearish. If this continues to push here, that's going to be interesting. And that could be the final push that we need to get back into normalized conditions. If we start to push towards that 4.5 here on the 10-year, above that would be your 5 level. And if the 2-year hangs out here, that would put us into normalized conditions. And that could be the indicator that markets need to start signaling a recession coming within the near time frame, where we go back to normalized conditions from being inverted. Moving over to the dollar, we did get a little bit of a sell-off in the dollar. To me, this was just overextension. You can see how extended we got on the hourly chart yesterday. Got up to an 83.14, super extended on this massive candle that we saw. Got a little bit of selling. We're still holding this high here from Thursday. Needs to hold that level if it's going to do it. And I still have that 505.50 level as a target. Moving over to bonds, you can see J&K selling off right back into that support area. So that level is around 93.80. Below that, I have 93.67. Really has not changed this structure. Still in the same zone. We just went from the high to the low of it. Momentum and RSI bearish. If this breaks down, that's going to be concerning. We'll see how that plays. But right now it hasn't done it. And then looking at TLT, 3 bearish days in a row. It is back below this trend line here. You can see finished right on top of it, almost to the penny. So we gapped through the 144. We're back below all the MAs and SMAs. Momentum and RSI bearish. And it does seem like the 10-year might be headed higher. You can see we're at resistance here in these previous lows as well. So that is a new relative low, and that definitely looks a lot weaker going into tomorrow's session now than it did yesterday. And it did look weak, pretty substantially yesterday, and now we just got more continuation. So support down around that 90 area, and then I have an 89.16 level just below that. Moving over to volatility, move index continued higher. So bonds definitely showing weakness. VIX got another spike here, got all the way up to 15.4. Interesting. Still closed below that 14.7 area. We'll see how that plays. Momentum and RSI bullish. So we'll see how volatility continues to go higher. It does seem like it's going to. It's at that critical point, the 144 and the 200. If it does, your next level would be up around 16. And then if this structure starts to break, you could see some 17.5 to 18.5 range. Moving over to my accounts, you can see I obviously lost money. Markets were down a lot, but I did roll down into them and I was able to mitigate a little bit of it. Not as much as I would have wanted. It did go down a lot early in the session, and that's a little bit harder for me to mitigate. But in terms of positions here, you can see I did roll down to 205 on the IWM for about $1, so I'll be able to collect about $2 out of that. We'll see see how it plays tomorrow. If we get a little bit of a bounce, should be okay, at least over the past 2 days on that position. And then the Qs definitely took a hit here, rolled down to 439 for tomorrow's session. And then we got a pretty decent bounce into the end of the session. So I ended up rolling out to 2 days from now. I don't know how I feel about that. I'm actually a little bit concerned. And you can see we actually finished basically flat after hours. So that was decent. Right now at 440, my max profit 2 days from now would be 443, which would give me about $2 of potential upside on this position going into the end of the Thursday session. So not my normal strategy. It is a little bit in the money, so it does give me a little bit of protection, but still looking to collect about $400 more on that position on my main account and about $200 here on this account. So over the next 2 days, that would be around $600, which isn't terrible. And then I have the 100 coming in here from the IWM. So still trying to make it work, trying to play some downside protection while still giving myself some upside potential. And we'll see how that plays through tomorrow's data as well. Let me know down in the comments section what you thought of the Fed speak here today and its effect on markets. When do you think we're going to get that first cut? And will the markets react positively, or will that be a risk? Definitely like and subscribe if you got any value out of this, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.